A government bond is a debt security issued by a government to support government spending and obligations. Government bonds can pay periodic interest payments, called coupon payments. Government bonds issued by national governments are often considered low-risk investments, since the issuing government backs them. In this video, we are going to talk about investing in government bonds for beginners. If you are interested, so stay tuned into the video. Definitely you will find some value. Let's move on towards the topic. Government bonds in simple words. Government bonds are issued by governments to raise money to finance projects or day-to-day operations. The U.S. Treasury Department sells the issued bonds during auctions at regular intervals throughout the year. Only certain registered participants, often large banks, can buy U.S. government bonds directly at auction. When the government holds a bond auction, each buyer submits its purchase bid, and the auction continues until all the bonds are duly distributed. Some Treasury bonds trade in the secondary market. Individual investors, working with a financial institution or broker, can buy and sell previously issued bonds through this marketplace. Treasuries are widely available for purchase through the U.S. Treasury, brokers, and exchange-traded funds, which contain a basket of securities. The U.S. versus foreign government bonds. U.S. Treasuries are nearly as close to risk-free as an investment can get. This low-risk profile is because the issuing government backs the bonds. Government bonds from the U.S. Treasury are some of the most secure worldwide, while those floated by other countries may carry a greater degree of risk. Due to this nearly risk-free nature, market participants and analysts use treasuries as a benchmark in comparing the risk associated with securities. The 10-year Treasury bond is also used as a benchmark and guide for interest rates on lending products. Due to their low risk, U.S. Treasuries tend to offer lower rates of return relative to equities and corporate bonds. However, government-backed bonds, particularly those in emerging markets, can carry risks that include country risk, political risk, and central bank risk, including whether the banking system is solvent. Investors saw a bleak reminder of how risky some government bonds can be during the Asian financial crisis of 1997 and 1998. During this crisis, several Asian nations were forced to devalue their currency, which sent reverberations around the globe. The crisis even caused Russia to default on its debt. Are you still watching my video? So definitely you will like my other videos as well. If you are interested in stock market or investing, and you don't subscribe to my channel yet, so subscribe right now because I upload these types of videos regularly. Now move on towards the topic. The uses of government bonds. Government bonds assist in funding deficits in the federal budget and are used to raise capital for various projects, such as infrastructure spending. However, government bonds are also used by the Federal Reserve Bank to control the nation's money supply. When the Federal Reserve repurchases U.S. government bonds, the money supply increases throughout the economy as sellers receive funds to spend or invest in the market. Any funds deposited into banks are, in turn, used by those financial institutions to loan to companies and individuals, further boosting economic activity. Let's discuss some pros and cons of government bonds. Let's start with the pros. 1. Pay a steady interest income return. 2. Low risk of default for U.S. bonds. 3. Exempt from state and local taxes. 4. A liquid market for reselling. 5. Accessible through mutual funds and exchange-traded funds. Now come on towards the cons. 1. Offer low rates of return. 2. Fixed income falls behind with rising inflation. 3. Carry risk when market interest rates increase. 4. Default and other risks on foreign bonds. Let's see some examples of U.S. government bonds. There are various types of bonds offered by the U.S. Treasury that have various maturities. In addition, some bonds return regular interest payments, while some do not. In the U.S., the national debt refers largely to the notional value of outstanding government bonds. The largest portion of the national debt, approximately $24 trillion, is held by the public. Intragovernmental holdings make up approximately $6.6 trillion, for a total debt of approximately $30 trillion. Here are some examples of U.S. government bonds. 1. Savings bonds. 2. Treasury notes. 3. Treasury bonds. 4. Treasury inflation-protected securities. After gaining so much information, I know now you have some questions in your mind like, how do you buy government bonds? How do government bonds work? What are U.S. government bond types? So don't worry, I'm here to answer these questions as well. So stay tuned into the video, and if you like my effort, so don't forget to subscribe my channel. Now move on towards the topic. How do you buy government bonds? U.S. Treasury securities are available to investors through their broker or bank, or directly through the Treasury Direct website. Investors can also look to exchange-traded funds or mutual funds that invest in treasuries. How do government bonds work? When governments need to raise funds for operations or to invest in projects, they can sell bonds to investors. In the U.S. case, bonds are sold through the Treasury and represent debt owned by bondholders. These bondholders are credited with interest and a return of their principal when the bond matures. This makes bondholders of treasuries essentially creditors to the federal government. Why are interest rates on government bonds usually lower than other bonds? Bonds issued by the federal government are considered to be essentially riskless. In the U.S., the federal government has never defaulted on its debt, and the government could theoretically create more money or raise taxes in order to pay for the interest on existing debts to avoid default. Therefore, treasuries carry what is known as the risk-free rate of return. Corporate and other bonds must carry higher yields to compensate investors for the additional credit risk that are inherent to them. What are U.S. government bond types? The U.S. government has a variety of different treasury securities available for purchase, depending on what the investor is looking for. The different offerings of the securities are treasury bills, treasury notes, treasury bonds, treasury inflation-protected securities, floating rate notes, Series I savings bonds, and Series E savings bonds. What are examples of non-U.S. government bonds? Foreign governments around the world issue debt in the form of bonds. Some of these commonly include the UK gilts Germany, Bunds France, OAT Japan, GGB BTP Canada, Canada bonds. The bottom line, government bonds issued by federal governments are among the safest investments around, often carrying the risk-free rate of return. However, because of their lower risk, they also carry relatively lower yields. In the U.S., federal bonds are known as treasuries, which consist of short-term T-bills, medium-term T-notes, and long-term T-bonds. Foreign governments also regularly issue bonds. State and local governments may also issue bonds in the form of municipal bonds. These are attractive to some investors, since they can offer certain tax exemptions. I hope now you understand how you can invest in government bonds if you are a beginner. So that's it for today. And if you will find my video valuable, so don't forget to like and subscribe. We will meet again with another interesting topic. Till then, stay safe and stay happy.